with several links and different educational videos that we've put together for you if you want to fill that out. One of the speakers today has some information inside of that, so you're welcome to click there. But we appreciate you guys taking the time to be with us for sure. Hey Robert, how are you doing? See Robert, our one of our prime speakers today, just logged into the room. Very excited to have his expertise on here. We've got a two-part session today. The first part is going to be Darrell Martin, and Darrell's going to talk about dynamic trading strategies. And then we have Robert Green, CPA of Green Trading Company, and Robert is going to be talking about post-fiscal cliff tax planning. And he's going to be going through some stuff, talk about trader tax status, talk about trading entities, and then also do some Q&A with you guys. So it was interesting, in the email we sent out promoting this, we talked about that, some people like to make money, some people like to save money. A lot of people like to do both, and so we thought, well, we'll have Darrell come on and talk about ways to make money in the market, then Robert come on and talk about ways that hopefully you can save some money. Looks like we've got a nice crowd this afternoon. Real quick, if you can, type in where everybody's joining us from. It's always fun to see where everybody is joining us from. All right, very cool. Virginia, Los Angeles, Maine, Utah, Southern California, the mountains of East Tennessee. There you go, Joe. You guys having some cold weather right now? North California, Orlando, Santa Clara. Yeah, we're actually located down in Alabama, and it's supposed to have snow flurries tomorrow. So that's a big deal for us. East Texas. All right, we've got about 38 seconds to go. Type in yes or no. How many of you have attended a trading pub event before? Type in yes or no if you've attended a trading pub event before. All right, very cool. So it looks like we've got a pretty good mix in here. Not sure. There you go. All right, sounds good. Well, we're going to play just a quick video real quick to kind of start things off. Then we're going to turn it over to Darrell Martin, who's our first speaker. And so I'll be back right after the short video. Well, very cool. Well, we appreciate you guys taking the time to be here today. Looks like we've got a great crowd, well over 100 people in the room from a wide variety of places across the country and some from around the globe. So we appreciate you guys being here. Just to tell you a little bit about us with Trading Pub, we're all about free education. We're very appreciative to the people that take their time to come in here and educate. Today, the two educators are going to be Darrell Martin of Apex Investing and then Robert Green. And like I said earlier, today's session was focusing on making money and saving money. And so the first part is going to be by Darrell. He's going to talk about some trading strategies for the night market. And then the second part by Robert Green, who's a CPA specializing in trader tax issues. And he's going to talk to you about things like trader tax status. He's going to talk to you about using an entity to trade and then taking some questions from you guys to see how he's able to help you. So we're really excited about today's event. We are going to record the event. We'll get it posted on our website. All our recordings go on our website under free education, and we'll email that out to everyone who registered as well to make sure that you guys can review this awesome session. Darrell, at this time, I will turn things over to you, and we appreciate you taking the time to be with us. You're going to take care of the first half, and then we'll turn things over to Robert around 4 o'clock.
Excellent. So am I coming through pretty good right there? All right, let me get the screen share going. 1 second, the projector is loading. All right, there we go. All right, can everybody hear and see everything? Confirmation over in the chat window there. All right, cool. So we're good? All right. All right, just want to make sure that everybody can hear and see. Perfect. Nothing like being on a webinar and the person's talking, you can't hear anything they're saying, you see slides moving, or they're talking, you don't see any slides set up. Again, Morgan, I appreciate you having me on the webinar today, and welcome on Trading Pub. There is a lot of great information, a lot of great commentators. We're actually a commentator for Trading Pub now as well, and we're committed to free education. So our goal is line up together to help traders get quality education, because there's a lot of stuff out there that, as we all have experienced, is not worth it. So we like to give away pretty much all of our education for free. And so we're going to talk about a few things tonight and go into a little bit more. Let's see here. All right. So first thing I always start off with, anytime we're doing kind of trading education, is go into, of course, the disclaimers. I leave those up there for a few seconds, let you read them, check them out, and just helpful to know that's right there. And the next one is the standard disclaimer we put up, and one that's really cool about what we're going to talk about today is you'll notice it does not say that you can lose more money than what's in your account, like most disclosures do. It's because we're talking about you can't lose more money than what is in your account, because we're talking about Nadex and or certain types of binaries, and we're also going to talk about the spreads, which are completely misunderstood by most people. And we'll go into those a little bit. We'll focus a little bit more on the binaries, and we'll probably do another follow-up webinar going more back into the spreads as well. But again, you can never lose more than the risk you put up. And so it's just, I love trading on Nadex for that very reason. I don't have to stress out. But I was looking at trades today on currency where my risk per mini lot was $10. Okay? Well, just a margin alone would have been over $200 at a spot FX broker. So I'm going in, I'm not talking about binaries, I'm talking about the normal spreads that are just like trading. I mean, they're talking 1 pip of premium. Okay? So they're the same thing. We're talking $10 risk, $10 margin. And I was even pulling these up on, I have a radio show I do every day. I was pulling these up on the radio show, and I can broadcast it out so people that hop online that are listening can also watch. And literally $10 risk on trades, $10 margin on trades for a mini lot, $100 risk on a full lot, and no matter how far it goes against me, I can't lose. So it's just it's a very, very cool way to trade. And then Morgan has a link for you, going to give you specifically to get access to a few extra things as well. So Morgan, whenever you want to post that or whatever, you can do that. But we may post it at the end of the webinar. But we have some other bonus things, webinars coming up. What we're going to talk about right now is dynamic trading strategies. Okay, And we're talking about trading in the evening, trading overnight hours, trading Forex, using the news. So how can you use the news to help you trade Forex? And I don't simply mean by like, okay, I'm going to try to trade the news and pick what direction based on what I think is going to come out in the news report. I'm more talking about there's so many different things that you can trade. How do you know what to trade? How do you know what to focus on? And so we're going to talk about what to focus on, tonight, and look at different things that are coming up or tomorrow night. So that way you'll actually be able to focus down on specific markets. But tonight there's a specific report that you can focus on, and it lets you focus on one currency pair on a trade that you can place this evening. So we'll talk about that. We're going to go into what strikes. If you've traded binaries at all, this is a little more advanced, but if you want to get the basics, we do have, like 15-minute step-by-step ABCD videos. And again, Morgan gives you access. If you haven't, Morgan gives access to the whole video trading library, and it's free. But we're talking about, what strike to pick on a binary, or, what your profit target is, where to take your profit, how to take your profit, whenever you're trading on Nadex. And all this is very, very important, and we'll put it all together for you. And it's really ideal when you're trading overnight, because as a trader, when you're starting out, before you're a full-time trader, you need to be able to trade overnight. And also, even if you are a full-time trader, sometimes there's some good opportunities at night you may want to take advantage of. And but if you're part-time, you may not have the ability to trade during the day. And you can trade Nadex on your phone and stuff like that. But you want to sit down, you want to focus and all that. And you can do this at night after your day job, while you're working on getting that account to the size and the income level that you want to get to for taking it to the next level. And I started out trading at night, Forex at night. So it was one of the first things I did. Here's the first thing to start off with. So if you have a pen and paper, or if you don't, you may want to grab one immediately. But this is the trading sessions, okay? So, and let's see here. Maybe I can even help you out with this. If I can grab it, maybe it'll let me. We're gonna all jumble together, but there you go. You can separate it out. The trading sessions for you want to know about. So 5 p.m. and this is Eastern time, by the way. 5 p.m. to 2 a.m. is the Australian trading session. So that's Aussie dollar. Okay, so that's really going to be your main focus. Starting at 7 o'clock, then you have the Japanese trading session. So that's going to go up to 4 a.m. These are really, when you look at taking entries, these would be the times you'd be looking to get in. Now you may hold the trade longer, but this is the timing for your entry. So 7 to 4 for US yen, Euro yen, pound yen. And then 3 to 12 is your European session. I'm rarely ever am I taking a trade before 3 o'clock or after 12 o'clock on FX, unless I see just a major solid move. The majority of your good solid trend moves that are easy to predict are going to happen during 3 a.m. to 12 p.m. Eastern time. Then you have your North American trading session, and that's going to be your US Canadian, US franc, Euro dollar, pound dollar, US yen. But even then, like US Canadian is probably the number one pair after 12 o'clock, and really most of the reports are out by then anyway, so it's not even, a rule is pretty much I don't trade much of any Forex after 12 p.m. But you can start back up at 6. So as far as new entries go, that lets you know sort of what pairs you could focus on based on basically the countries and the reports that come out. And we'll be going into those reports here in a minute and several resources. So what you're going to do is you're going to look for news reports on FX pairs, during the times of these trading sessions. So like when the Aussie dollar is going to have a news report come out, you're going to want to know about that, trade the Aussie dollar. And tonight we do have that. We have a big report coming out on the Aussie dollar. So right here, we have a couple economic calendars inside our website, and also on the calendar B right here. So we have look at my calendar 1, calendar 2. There's a lot of different calendars you can take advantage of inside here, but it has a lot of information for you, and we'll go how to use this information. But they have their unemployment rate coming out tonight. Well, you know that the unemployment rate's a big number here. I'm not talking about, this is their employment number, employment change number, employment rate number. And this is the big one, and this is second in importance. But we'll talk about that, but I'll let you know what's the pair to focus on tonight. The heaviest impact reports are going to happen on the Aussie dollar. So that's a pair that you can focus on. You know when it's going to happen. It's going to happen at 7:30, okay, Eastern time tonight. And so when you know that, it makes it easy. You're not focusing on 8 different things at one time, which can be a huge challenge. Those times right there, I want to say, are Eastern time. Let me see. Yep, they're Eastern time. And then so 6:30 Central time, 7:30 Eastern time. You also want, so you want to look at that. You want to look for the heavy impact events. So like one of the ways that was rated right there is notice how it had like the three little bulls right there. So for how heavy of an impact that report has. Okay. And then another thing, and this happens a lot. I talk about this on my radio show every day. I go through the big events that are coming out and which ones you want to pay attention to. Is you want to when there's a lot of different announcements coming out at the same time. So like there were several Fridays in a row there where we had people coming out and like U.S. Canadian and the U.S. dollar had 8 or 9 reports happening all at the exact same time. Okay, and really we had that. Let's see, this morning or like there's one of the days this week we had like 4 reports U.S. and Canadian coming out. Maybe it's Friday. At the same time, let's see, a U.S. and a Canadian. So yeah, there's a couple reports coming out on Friday, but nothing major right there. But whenever you have a lot of reports, so you have 8 reports coming out on the U.S. dollar and the Canadian dollar at the exact same time. So Eastern time, Chris, Eastern time was the times I was listing. If you have reports coming out at the exact same time, okay, what pair would you want to focus on? The pair that, like, if you have 5 U.S. reports and 3 Canadian reports, what would be the FX pair to focus on? So it's pretty obvious. It'd be U.S. Canadian. Okay, there's going to be a lot of volatility, not just U.S. but U.S. Canadian. So the cross of the two, because they're going to cause a lot of volatility when both of those reports come out. And like I can go back in here and we can look back like literally multiple days. And let's see here, see if I can find the best one. But one of them, it was insane how many reports were happening all at once. Here it is. This isn't rare. I mean, it happens on a regular schedule. But on January 4th here, look at this. All of these U.S. Canadian reports at the exact same time. Okay? And if I pull up a chart, let's see here. Let me just grab a 1-minute chart over here. Let's see, got a series. Make sure I'm loading up days. Then I'll go in here. Up with USK, and we'll see how much volatility happened when that happened. All right, and then how we can take advantage of that. There we go. Okay, and then U.S. Canadian. It'll take a second. It'll load. Going slow. Okay, and then right over here, so we'll go over bar. Even back it out 10 minutes, a little easier. Okay. All right, there we go. So Eastern time right here, 8:30. Okay. Reports come out. Bam. Massive move. Okay. Lets you know exactly what pair to focus on, because all those reports are U.S. Canadian at the same time. They were going to cause a lot of volatility. And yeah, Forex Factory is a great website. I pull it up. Let's see here. There you go. Forex Factory is another one. So I like different ones for different reasons. So it just depends upon what I'm looking for. And Forex Factory has limits on how far back you can go. Pretty far back, but it doesn't go as far back as I like to go a lot of times on reports. So that's why we built a couple other ones into our website as well. But I do use Forex Factory pretty consistently as well. So it's a great one. But anyway, so those are just a couple of the examples. This one right here, like I said, the big advantage is how far back I can go when I want to pull up a report. And I mean, it goes back very, very, very far. And it's also just easy to use. I mean, there's history, there's the chart, there's the details. I've also found it's faster. Forex Factor gets overloaded. It's so popular that whenever the announcement comes out, a long time, it'll take a long time to update itself. So, and I also like this has I think both of them have the release URLs. It has most of them on Forex Factory, but it'll take you directly to the release, which is actually the fastest way to get the data, to go directly to the release URL. So, okay, but anyway, so quick summary, we're just looking for FX pairs that trade during the sessions that have high impact reports. And if we see 2 different things having reports at the same time, then we may want to trade that cross currency, okay? When we're trading, and right now we're talking about Nadex, okay? And the reason I like trading Nadex, especially with Forex or with news or whatever, is one, the risk is completely defined. If you don't know who Nadex is, they're an exchange, and they are regulated. And the other side of the trade doesn't know who you are, whether it be a market maker or another trader. They have no commissions because you're trading direct with the exchange. The exchange makes money on exchange fees, like the CME does. So there's a lot of advantages to trading with them, but the biggest one is you can use less money and get larger leverage. Like if I put in $10 to control a mini lot, that's controlling $10,000 with $10. That's 1,000 to 1 leverage. Okay, and here in the U.S., like we got cut back to what, 50 to 1 on the major pairs. So now you can actually get higher than what you could get before, but it doesn't cut both ways. And that's when you're trading the spreads. You also can go in and you can trade the binaries. Let's see what's open right now. Let's see. But you can go in here, and this is just an example showing weeklies at the moment. I wouldn't be using weeklies. I'd be using dailies because basically I expect to get in and out of the trade the same day. And but I could go in here, and on this trade, if this lined up, I could risk $10 on the trade. I can make $90 on this trade. Okay, now that's a maximum. We're going to talk about how you don't ever go for the maximum here in a minute, because that's the number one mistake traders make when they trade Nadex, is they're trying to hit that maximum profit, and that leads to losing a lot, losing often, maybe the better way to put it. Okay, so when you're trading at night, you can use the spreads. Here's the issue with the FX spreads at night. Is they're gonna basically they have 3 different expiration times for the longer term spreads. One of them's gonna expire at 11 p.m. Once that's over, one will expire basically 8 a.m. Once that's over, one will expire at 3 p.m. So you're not gonna be able to trade through to the next day. But with the daily binaries, you can trade all the way through till 3 o'clock tomorrow. So let's see here. So I've got a good question. That's all well and good. However, the Forex spot market traders are different than the Forex futures market. How do we trade against the market makers in the spot market? You're not trading against the market makers, okay? You're just trading. So that has to follow, and this isn't futures, okay? This is following the spot market. And by the way, the futures in the spot are in line, okay? The difference in the price is based on the carry. And there's an arbitrage trade you can do actually based on it, but it's based on the carry. So one goes up, the other goes up. If it doesn't, there's arbitrage, and you can go in and grab that money pretty quick and pretty easily. But you're not worried about trading against the market makers. You're trading directionally, and your risk is capped. So we're not trading spot, we're not trading futures, we're trading Nadex Forex, which is following the spot market, and nobody can stop us out. So when I go in to do a trade, I can't be stopped out of the trade. And my risk will not increase on the trade. My risk is defined up front. So you're not dealing with some, over-the-counter guy like at a Forex market, okay, like spot, and you're not having to deal with massive leverage that can cut you both ways on Forex and futures. And nobody can hunt your stop because there is no stop to be hunted, okay? It literally is following Forex. So no more stop hunting, ever. And that's probably the number one thing I love about trading on Nadex. I'm not worried about somebody hunting a stop. They can't hit my stop. It's impossible. So my risk is defined up front. If they hit it, they could hit my stop in the sense of I can't lose any more money, but they can't stop me out of a trade. So I don't have to put more money to get back in the trade. Anyway, so right now we're going to talk about the binaries, but this also does apply to spreads. But for the binaries, the big advantage is you have till 3 o'clock the next day. So looking at FX history, okay, is the first thing I'm going to do. So if I go in and I find a report like the Aussie dollar coming out tomorrow, then let's see here. So I pull that up, and I can go up here, and I can choose my date of today, right here. And then I go down, and I can see, okay, employment change. Now I can expand this. I go down to the report. I can expand that as well. The biggest thing I want to look at, okay, first is the history of the report. So I want to see, the actual versus the forecast, okay? And I want to look at both reports. So history on this one as well, actual versus forecast. And when I do that, I then want to pull up the historical data. And you're not going to be able to do this in a lot of platforms, but I use NinjaTrader, and if you don't use Ninja, it's great. I didn't like Ninja 6. I love Ninja 7. And you can go in, and I can pull data like 5 years back on intraday bars. Like you can't do that in Thinkorswim and things like that. So, but I can go in here and I can pull in a ton of data, and I can look at it. But what I'll do is I'll actually go in and I'll look at each day and how it corresponded. What happened when it was better than expected on both reports. What happens when it was worse on one report and better on the other report at the exact same time? So what happens when it was better on this report but worse on this report? And you go through and put your stats together, get about, ideally 12 months of data. So it takes a little time, but I mean, you're looking to make money. So I mean, you're not talking about that much time, right? It's a monthly report, okay? So go back and you pull the last 12 months of data and just see how did it work. And now the cool thing is once you build this up, then you're actually getting an arsenal of trades together, because next month when it comes up, you don't have to do this homework again, okay? You already have the stats on how it reacts. And you want at least 12 months. You may want to go back and pull even more. And that's, again, one of the reasons I like using this one is I can go really, really, really far back on the reports. So, and I mean, it will load just a ton of information for you. So just think about how much, you're looking to pull, but most of them won't go past certain, levels right here. You can see this has been around for a while, longer than most sites. And, I mean, it just keeps going. So as much as you want to get, it's there. So it's nice. You can even pull information back from like the crazy 2008 year and everything else. So what of that you won't be able to find, like on Forex Factory and stuff like that, because it'll stop. But anyway, so there's a lot of stuff you can pull on there, and it'll take you back at least to 2008 on most reports, and most of them will. But that's just one that I use. But either one, whatever you like, it doesn't really matter. Just find one that has the history, find the expectation, find the results, and then look at several things. Does the market go up when expectations are missed, or does it go down when expectations are missed? Does it go up or down when expectations are exceeded? Does it move immediately and keep going? In other words, does it take off and keep going, or does it take time to make the move? That's huge, because if it takes time, that's really cool, because the report can come out, then you can hop in and trade the direction of the report. So it's very, very helpful when that happens. That does happen quite a bit on quite a few reports. There's a water report, like trades we called out in the last couple of weeks, that actually did that. Does it move fast in the direction of the news, then pull back, okay, and then retrace back to the higher low that occurred off of the news? So we actually saw that like on natural gas last week. It did that. Shot up, pulled back, like a natural gas inventory comes out every Thursday, pulled back, and then took off. So you actually could have let it go first. When it comes back, then you buy, and then you get out when it reaches that same high. And so there's, like I said, there's a lot of ways to trade it. I have a whole video on like natural gas. And but like right here, if we go in and look at natural gas, look at last week's report. Let's see here. That's a little far. Last week would have been on the 10th. So right here. Okay. So we go in here, and then the report comes out, and then it pulls back, and then it takes off. So there's a lot of different ways that you can trade. I don't want to go into all of them right now, but I want to focus on Forex. But that's a pullback where you can then hop in the trade and take advantage of it. And then how far does it usually move? Does it usually move 30 pips or 50 pips or 20 pips or 10 pips? Some reports aren't worth trading. They don't move far enough. Okay? So some of them are sporadic. So this just lets you know, okay, cross this one off my list, add this one on my list. Now this is going to take you about 3 months to get, not for one trade, but to get the whole calendar together, okay? So if you'll do this each day, and every day there's not a report, by the way, okay? So a few days out of the week. If you'll go through and do this over 3 months, you'll have the entire FX government calendar with a few exceptions, okay? You basically have almost every single report that comes out, and you'll have all the data on it. And then going forward from that point, you'll know what your trading plan is. And so this is a huge way. If you want to build a way to be able to trade at night, this is how you can build up a whole list of trades. You'll know when you're going to do them, what day you're going to do them on, and what you're going to do when this happens, okay? So that's the homework you got to do. So it's also good to look at, how did the report do compared to the last report? So we talked about whenever you're looking at the report and it actually gets released. So like right here, we're looking at this, and we can see, the forecast and the expectation, okay? So the forecast is 4.5 thousand right here on the employment change. The heavier rated number is the unemployment rate. The forecast is 5.4%. So when the actual comes out, how does the actual compare to the previous actual number? So not only does how it compare to the forecast, but how does it compare to the previous actual number? The other thing I look at is how does it compare to last year? So 4.5, and I go down here and I go, okay, well, what about January of last year? Okay, so we go down here, January last year, negative 29,000. They did not have a good report this time last year. Okay, now over here, we go down, we can see, did they have a good report last year or not? And it's good to sort of know what these numbers are before the news announcement comes out so you're not scrambling. But January, they had a positive report on the unemployment rate. They had a negative report on the employment change. So this is like the percent of unemployed employed. This is a change in how many people are employed or aren't employed from the previous month. And if you don't know what these reports are, it tells you right there. So you don't have to be some expert knowing what all of them mean. They'll tell you what they mean. And it also tells you what the effect should be on the currency itself when the report comes out. Okay? So, but check that out, and you start gathering your information. And then also you want to see, what are there other reports that were released at the same time? Like on this one, the employment change and unemployment rate always come out at the same time. So you do want to compare the two and go, what happens when one was positive, one was negative, both were positive, but and you put together all this analysis, and it's not hard. I mean, you're not talking about hard analysis, or lower. What happened? Okay? So if you had 12 months, I mean, you're talking probably 30 minutes to an hour if you're really taking your time. And I would take notes, and then I would just get the whole arsenal put together. And it really is it's an awesome way to trade, and it's a good way to trade at night. Now, strategy selection. How are you going to trade it? Once you've got all this data, okay, then hey, how does it move? Does it move fast? If it moves fast, then you may want to, okay, and that's where you buy a binary above the market and sell a binary below the market. You can't do this on bucket shops. And I won't even mention names, but there's plenty of them out there, and probably a lot of you know who they are. They don't have price ladder binaries, okay? I'm talking about price ladder binaries. That means you have multiple strikes you can choose from. And I would bring them up on Nadex, but I think, well, I still got them there. They're about to close here in a few minutes. But instead of just having a call or put binary, it's in there closing here in like 3 seconds, you have the ability to have multiple strike levels. So you can buy one up here and sell one down here, okay? And it's great to take advantage of that. Now, if you have a directional bias, like, hey, it's been positive a lot, so I just want to buy on one side, you could also go in before the news. I prefer to go in after the news. So especially on reports that take time to take off, like oil inventory report took time to take off, that would be an example of you could have went in and bought the oil inventory. I actually had a sell order planned. Oil inventory report came in positive, I canceled my sell order out. So, so being directional after the news is a lot of times easier, but if it takes off fast, if it's one of those that moves when it comes out right away, you won't have time. So if it moves really fast, especially like that US-Canadian example I gave you where it just takes off because there's 8 different announcements going out at once, that's where they're being directional or strangle, so you don't care what direction it goes as long as it moves. Works out best. And the other one, which is probably one of my absolute favorites, is when it takes off and I'm like, oh man, I missed it, and then it pulls back within about 10 to 20 minutes, okay? I don't want it, if it takes hours, that's not going to work for me. But in the first 10 or 20 minutes, it is a pullback, then I buy to get out at the high. So let's say it took off, okay, and then it pulled back, I'd buy to get back out at the high that it was at right when the news came out. All right, so right here, ensure the risk and reward, this is important, okay, is a 1-to-1 or better. And these trades work a lot if you do them correctly. And so, but you need, so if you have 1-to-1 and you have a greater than 50% probability, and you'll know, I mean, if you just look at history of how it works out, 1-to-1 or better, meaning if I'm risking 25, I want to be able to make 25. If I'm risking 10, I want to be able to make at least 10. If I'm risking 100, I want to be able to make 100. I mean, per contract. So really it'd be 50-50 because every binary is worth at most $100. But you can do 10 of them, 20 of them, 50 of them, 100 of them, whatever you want to. But I want a 1-to-1 or better. So if it's going to cost me, too much money to do the trade, like maybe you're looking at a strangle, but it's $35 on each side of risk, that's $70, probably not going to work as a good trade. And then do remember, if you do a strangle, both binaries have to be combined into the risk because only one side you're expecting to win. Okay. Knowing what strike to pick. So this is about having proper expectations. How far do you think the market is going to move? And there's a lot of different ways that people determine how far the market's going to move. One way they use is I'm sure everybody in here has probably heard of pivot points. So a pretty common methodology, okay, or pivot points. Another one is, possibly Fibonacci levels, which can be pretty tricky to use correctly. They're awesome if you know exactly how to use them, if you've been taught by a professional trader how to use them, that uses them to make money every day. But there's a right way and there's a wrong way. And I've only met probably 1 out of 10 people that actually use them consistently, I know, use them correctly. Most of them are just using them to guess. And then the other thing, we call standard deviation. So standard deviation is basically the bell curve. We've all heard of the bell curve. So how far is something expected to move on a given day? But standard deviation is based on historical volatility. So how far something moved yesterday, it has nothing to do with how far it's going to move today. So one of the things I've done, and you can get access to this for free, like whenever you fill in that link there that he's passing up there, is you can go in and get access to our deviation levels. And with our 15 options, okay, over 4 different contract months, I factor that implied volatility into a weighted scale. And by the way, implied volatility, if you don't know, if you haven't traded options in the past, you don't have to know this. I'm just explaining how it works for those who want to know. Implied means expected, volatility means movement. So I take the expected movement that's priced into an option, which happens all the time. And if you want to think about it, if you want to buy a call on Apple the day before the earnings announcement comes out, there's a lot of expected movement. That call is going to be expensive. If you wait till the day after it comes out, and let's just say Apple stayed the same price, moved whatever, but the call is going to be cheaper. It's called a volatility crush. It sucks the premium out of the option because the movement is built into the option. And who builds that movement in? The market. Okay, the entire market defines the implied volatility by their demand for that product based on how far the market's going to move. And so we take the market's expectation of market movement, and the market is right. Okay, you don't argue with the market. We use that to define how far the market's going to move. And then we have these levels that we put in here. You can also pull them up on our website. If you pull them in through Ninja, you can see the historical ones, which is pretty cool. It's helpful, especially if you're, first time, you're just starting out, you're trying to figure out how to use it, and it auto plots it for you. But, or like I said, they're inside the website right here, and you can see them where we update them every day, and they'll update pretty soon here to Thursday, here in about an hour. So we look right here, we see this, and it says, okay, this is one deviation. We basically, 70% of the time, we expect the market to stay within a single deviation, either up or down. This doesn't tell you direction, it tells you distance, okay? And notice, like this was natural gas, one deviation. Yesterday, one deviation. So the day before that, one deviation, okay? And I mean, we post these at night, not making it up. It's right there. So it's very, very helpful when you know how far you expect that market to move. We can go in and see Aussie dollar. We'll pull that one up. That one's coming up tonight. Numbers aren't updated yet. They'll be updated before the report there. So we go in and go, okay, well, how far has the Aussie dollar been moving? Well, today it only moved half a deviation, but you know what? What's about to happen? It's right before unemployment, okay? So before that, what did it move yesterday? One deviation, okay? So it got sort of quiet before that employment report comes out. So you can see right here, I mean, a high to low, you got a deviation past 0.7, but if you factor that piece and put it right there, that'd be from low to high, that'd be a deviation. And right here, it just blew it out. I mean, Aussie dollar, I only hit one, basically hit 1.5 before the market reset. This day it hit 2 deviations. So we do plot it in case it does go further. But usually we're only counting on a single deviation move. All right? So, and ideally, if you can get in a half deviation, that's even better because it's even more likely it's going to hit that. There's like a 70% chance it won't bust out of a half deviation level at some point during the day. Okay, so we use that to let us know how far the market's going to move in one direction or the other. So if it's good news, how far is it going to go up? If it's bad news, how far is it going to go down? Now, this is probably one of the most important lessons I can teach you if you're trading binaries. There are 3 things you can always count on when trading binaries. At expiration, they'll either be worth 0 or $100. Okay, and this is how most people trade them. And this is why most people lose. They hold their binaries till expiration. So what happens on a binary is if you buy it and the underlying price is less than or equal to your strike. So if you bought a strike of 1.059 and the Aussie dollar settled below that at 3 o'clock, then you lose whatever you put in, the value is 0. So if you bought it at 20, it's worth 0. Okay? If you sell it and the underlying is greater than the strike, then you lose. Okay, so whatever you put up, You lost it all. If you buy it and it's in the money, then the value is $100. Okay? So if you went in and you bought it for 20, and the underlying is greater, if Aussie dollar is greater than the strike you bought on that price ladder, then you'll get $100, which will include the risk money back. So if you put it 20 bucks, you'll get $100, which is $80 profit and $20 risk return to you. Okay? If you sell it, then the underlying has to be less than or equal to. Notice I keep putting that or equal to, okay, the strike. So if you sell it and the Aussie dollar is equal to the strike or less than the strike at the expiration, the settlement time, okay, and there's new ones every hour starting at 8 o'clock, and then they have the ones that go to 3 o'clock at night, 3 o'clock the next day. And then they also have ones that go to 3 o'clock on Friday that start on Monday, like at 3 a.m. that you can trade. Then you have max profit. So if I sold it for 80, be able to buy it, basically it'd settle me out at 0, which would give me an $80 profit, like selling at 80, buying at 0, okay? And I put $20 at risk. So pay me $100, and that's an $80 profit. So 0 to 100, you know, guaranteed that's what it's going to be worth at expiration, okay? One of the two. The other thing you know, okay, because people always talk about, I see this complaint like in forums, I can't figure out how to price these binaries, you know, all these complaints. You know, guaranteed, that when the market gets to the same strike price, okay, so when the market gets to the exact same strike that you bought, so if you went in and you bought the 1.0560 strike and the Aussie dollar was at 1.0560, that the binary is going to be worth 50 bucks, okay, at all times. Now, to add in, you know, a little room for what if it only gets a tick or two away, or what about bid-ask spread of $1, $2, $3, whatever, then I'll usually go and let's say I bought it for 20 bucks, I'll sell it for 43. I buy it, okay, or if I sell it, let's say 80, then I'll buy it back at say $57. Okay, and one of the nice things about Nadex is you can put, not only can you put in your order, but you can put in a take profit order right after you're filled. So I would do it right now if the market was open, but I have videos that show you how to do this. But what happens is you go in and you put your order on. Let's see here, I can probably at least give you some sort of example here. That might be just to show you where to look, because that's the biggest thing, just knowing where to look on the screen. On the Nadex platform here, one more, there we go. All right, so we're waiting on these to open back up. But if we put it in, you go to your open positions, okay? And on your open positions, there's going to be a green arrow right next to it. It's going to look exactly like this. It's going to say, you know, Aussie dollar, and it'll say, you know, expires on this date. You do it at this time. This is the price you got filled at. You have, you know, you bought 4 of them, and here's the current market price, and here's your. There's also a green arrow right here. You click on that green arrow, and what it will do is it'll open a ticket in the opposite direction. So if you bought it, it'll open one to say sell 4 contracts, and it'll have the market price. You can change it. So let's say I bought it at 20. I could change the price to sell it at 43. Okay? So I got it at 20, sold it at 43. I made 23 bucks on a $20 risk. If that's not enough money for you, then fine, risk $200 and make $230. Okay? But that allows, if the market goes up and touches that level while I'm sleeping tonight, then it takes my profit for me. And remember, I'm buying the binary I expect it to get to. I am not gambling and rolling the dice. This is what holding an expiration is if you're buying an out-of-the-money binary, selling an out-of-the-money binary. I'm not holding and rolling the dice saying I think it's going to end above that price at expiration. Okay? I understand if you're buying one that's at 50 bucks and holding its expiration and you're doing on a higher than, you know, 50% probability scale and all this other stuff, buying one that, you know, costs less than $43, or if you're selling one at a price higher than 57, you should always be closing before expiration. So if I'm selling at 20, I could buy back, or if I'm sorry, buying at 20, I could sell at 43. If I'm selling at 80, I could buy back at 57. But I want to put that take profit order in, so when it touches my level, then I'm profitable on the trade. And just like we were looking at whenever I pulled this up over here, and let's say you had the 1 deviation level, okay? And I mean, it came down, and if you did that, see if you did 50 exactly, you probably wouldn't get filled. That's why we like that 53, 47 roll. But maybe you were asleep and you didn't get up until 9 a.m. Eastern time, okay? So you're right, you put this trade on, you know, in the evening. So back here, you put the trade on, you sell. It goes down, I mean, it takes its time. You know, you wake up in the middle of the night, you look at your phone. It's not really going anywhere. Maybe you're down a little bit. Then it comes down. You would have got out. You would have taken profit, okay? But you didn't. Then it starts pulling back up. You're looking at it and you're like, oh, what's happening? What's happening? And all of a sudden you're losing on the trade. Or maybe you forgot about it, or something happened, or your kid got sick, or you had to go to work, you didn't have time, or whatever. And you're like, okay, well, it'll come back down one more time, and then I'll take it off. Then I'll take it off when it comes back down. And just put your take profit order in. Don't be greedy. Trade with a plan. Okay? So that's how we know where to get out. Don't hold it till expiration. Exit when it hits the strike. And always base this on risk reward. In other words, don't go in and buy one for 30 and sell it at 43. That's horrible risk reward. If the trade's not there, don't take it. Okay? So entering a limit take profit order. Once you're filled, then enter the take profit order, open position, green arrow, adjust the price, then hit submit. Make sure it's what you want it to be when you hit submit. I don't know how many people I've seen submit the take profit at the market price and they've got in and got out right away. Okay? That's not fun. So for a quick summary for you, make sure you're looking at the trading session, focus on the FX pairs in that session. Look for high impact expected government news reports. Analyze the history of the news reports and how the FX has reacted. Choose your strategy. Make sure you're looking at risk reward in the process. Like a straddle or strangle before the news, being directional before the news, or being directional after the news. And then choose your strikes based on the deviations, the implied deviations, how far the market says the market's going to move. Exit when it hits the strike. And again, exit when it hits the strike. That is there twice on purpose. Okay? So that really is a quick summary for you. I hope you all enjoyed that. And got any questions, feel free to post them here. I'm about to hop on air, but we're going to keep it to around 40 minutes, so we did pretty good. Okay, if you're doing a spread, it would be a straddle because the strikes would be the exact same. If you're doing binaries, it'd be a strangle because they'd have two different strikes. So like the floor on one spread and the ceiling on the other spread would be the exact same. That'd be a straddle. But if you're doing a binary, then you'd be like buying an upper strike and selling a lower strike. So it's like think about like strangling somebody. You're putting your hands around their neck. So straddle, you're right on top of it. Yeah, you can hop in. It's actually broadcast, depending on where you're at. There's different stations all over, but we broadcast it through our website as well. So it's right in the free members area. Right in here. Right there. So I'll be on there in like 5 or 10 minutes. So this is just like a 15-minute spot. I'm on from 12 to 1 every day, and then 9 to 10 a.m. And then the archives are also in here, so you can go back and look at the archives. So if you want to go back and see what I'm talking about on news, go back and look at the archives. And then if you want to, we have a signal service as well if you want to check it out. It's pretty cool. It's been doing really well. It's been doing so well. It has well it's doing, because you won't believe me. But go ahead and check it out. And you can see each one of our trades, how it's done. You can see the equity graphs. And we have some very, very happy customers, to say the least. So nice lack of draw down there. But yeah, check them out. And that's if you want to get started, you want just to follow along. I post them out live via tweets. You get like 5 seconds after I put the signal out. If it's a binary, it's a strangle. If you're doing 2 spreads, it's a straddle. If you're doing it before the news. Most of our stuff is free. And I really do mean most of our, you'll be like insanely surprised. So an insane amount of content for free. And then we have different services, like we have P3 signals. You can actually try them out for free. Fill that form out, and you'll actually get a coupon to be able to check it out for free. And then we also have the scanner. This is probably one of the biggest tools that people love if you trade the spreads. Yeah, and it won't help you a lot right now because the market's closed for another hour, 45 minutes or whatever. But we actually feed all the data live from the Nadex exchange in, and it'll parse all of it, tell you what the best spread is in like 2 seconds. And so I can trade, I want to trade US 500 or Aussie dollar, and then you hit a button, and it'll open the ticket in the Nadex platform for you. I also have my own indicators, my own bar types, but you'll be surprised. Most of the stuff is free, and I don't want to turn it into a big sales pitch, but it, ranges anywhere from $100 to a couple $100 at most a month. So, but again, that's if you want to use the tools. You may just want to take advantage of the education, the trading forum. We have people posting on here all the time, right in this section. So we got questions on here, butterflies, condors. One guy just posted a question about taxes on here earlier. One guy talked about he's looking to trade FX and trying to put it all together, and so you can go in and check all that stuff out. But I'm a trader, number one, and you'll find that out. You'll realize that I trade a lot, and I love trading, and that's the primary goal. That's why we have all the free education. It's traders. So actually doing it. All right. All right, well, I'm going to hand it on back over to Morgan. I'm about to hop in right now.